Gordo, what is going on this week and what can we expect? Well, let's get right in. So, the Fed's December interest rate meeting could be off the charts. This could be exciting because off the charts can mean two different things, either rate hike or rate cut. Let's see the next article. We have Nomura Stanchart join top brokerages in forecasting Fed rate cut this week. Well, let me join in and give you guys a forecast of the rate cut that's happening this week. We have the 2-year yield with the government Fed. They're not even government, by the way. They're just a giant corporation. Anyways, side note, sorry. The orange line that is curling down right here is the Fed. They just follow the price action, which is in the blue here, and they just adjust rates close enough towards where rates don't pass them. So in the event of a reversal, the Fed won't be behind and they still look like they're in control. But as you can see here, we have a inverted head and shoulders pattern, which looks like it is just about to break out to the upside. We also have the head and shoulders pattern inside of a descending triangle, which is also bullish if it breaks out of there. And you guys can see my price target inside of the descending triangle. And if we just move that over, that's your price target. Basically, it's just up. Will the Fed cut rates this Wednesday? Is what you might be asking. I'm gonna say they're just gonna hold it. I don't think they're gonna cut just because they are already too close to that 2-year yield. Anyways, let's keep going. We have U.S. households' personal finance worries grew in November. New York Fed says. So you guys are wondering, well, how can that be? I'm telling you, I don't blame you for thinking that way because the Fed has been cutting rates, and you guys usually think, well, Fed cut rates, I can go out there, buy that house, buy that car for lower interest rates. Well, Fed, as you can see here, was cutting rates already here. This is 2025. Back here in 2020, we cut rates over here, and then we went flat because that was the recession we had during the lockdown. But here, remember these charts because I'm about to show you the CPI. So if you look here at the 2020, we dropped for like 2 months. And then we just keep going higher. And then in 2025, we were cutting rates, but it hasn't done anything. Now, why is that, Gordo? Well, that's because money is just debt. Right now, the lower middle class, basically you guys are just lower class now, but you guys can't really afford anything because the upper class, top 1%, can go out there and get those loans. And if you guys ask anybody, what is money? Where does money come from? And what erases money? I bet you nobody knows. What is money? Sorry, I just hit the mic. What is money? It is just debt. That's all money is. You guys might be saying, oh, but I can go buy that gold. No, go to the grocery store and give the cashier a gold coin and see if they accept that for payment. Most likely, no. So, 2, where does most of the money come from? So the creation of money is mostly just you walking into a bank and say, I want a loan. And then you're like, give me $1 trillion. And then the bank's just like, all right there, I'll give you $1 trillion and you have this interest rate on it and just pay it back. And that is how $1 trillion just magically appeared in the system. Did the bank need any collateral to give you that loan? No, their vault can be completely empty. But now you are stuck with $1 trillion, and on their assets sheet, they have $1 trillion that you need to pay back to them. Now, the third thing, what makes money disappear? The only way for that $1 trillion to go away and cease to exist is if you pay off that loan. So when you pay off your loans, the amount that loan was before is no longer there. because you just paid it off and now it doesn't exist anymore. Money! It's so much fun. Continuing, we have the United States ADP employment change. So, as you guys know, you guys have higher prices. We saw in last week's videos, there was the ADP job reports being down by 31,000. And here we have the historical chart of the past, I want to say 10 years on this one. Yes, 10 years. Amazing. I can count. But here you can see the 2020, we had a little hiccups here and there, and then we had the giant crash. And then here in 2025, on the right side, we have some hiccups here, and then now we just need the giant crash. That's all we're waiting for. Are we in a recession? Is what you might be asking. According to this chart, which is the Conference Board Leading Economic Index. Let me tell you how to read this. You read this by watching this blue line. When the blue line is above the black, you're safe. If the blue line goes below the black, you're in a recession. It's also marked out by this giant gray bar, which shows, yes, confirmation you're in a recession. Now you have the 08, you have 2020, and then 2025. Oops, you're underwater, it looks like. And now you might be wondering, why is there no giant gray bar over it? Well, they haven't called it yet, and they probably won't. And now on to the yield market, which is very scary right now. So here is your 10-year government bond. This is responsible for your mortgages, your student loans, basically your interest rates that you get on your loans. When it goes down, good for your interest rates and loans, because now you can go ahead and refinance that house at a lower rate. And when it goes up, interest rates follow. So now you have higher interest rates. Here, you have a inverse head and shoulders pattern that broke to the upside, which looks like that was yesterday, because this chart is on the daily time frame. So, what does that mean? We're going up. And we can also see on the 30-year, we also broke up. Because the 10-year and the 30-year are going up, you guys are going to have less buying power because now your interest rates are going up. You guys are already all unemployed, and you won't be able to buy a house as easily. So if you guys love scrolling through Zillow at night for some reason, just to see if you want that house, well, that interest rate's going to be higher on that mortgage. And so that brings us to the end. I brought you all the doom and gloom. I brought you all the education about money. I tried to break it down as simple to you as possible. Now, the solution. You go out there, you grab your little squeegee, and you grab a little Dawn dish soap, and you go knock on somebody's door and say, "Can I wash your windows for $10 a window?" If you don't get it yet, start businesses and trade equities. And with that, we will continue our education of money on Wednesday.